Hi everyone and welcome to today's morning report on Wednesday the 10th of February with me, Richard, market analyst at Hantec Markets. The European trading session has got off to a fairly positive start, and there's actually been a bit of a turnaround in sentiment that we've seen overnight. That we saw Wall Street closing fairly flat yesterday, and that was despite a huge sell-off actually we saw on the oil price. Oil price has actually found a bit of support overnight, coming on the back of sort of suggestions that Iran will be prepared to talk to Saudi Arabia overproduction cuts, and that has helped to sort of stabilise market sentiment to a certain extent. But we've also got a bit of a shift in safe havens. Actually, there's been a consolidation in some of these safe haven trades. Let me just show you. First of all, the yields. 10-year yield is actually trading at the high of the day now, but you can see a slight consolidation. Well, it's not really been falling so much in the last sort of 24 hours, and actually the 2-year yield actually trading higher on the day, 2 days in a row now, 2-year yield. So could this be a bit of a turnaround in near-term sentiment? We've got equity markets which are higher in the European session. We've got FTSE around about 0.9% higher, DAX 1.5% higher. Yeah, this is interesting because we've got dollar yen, which is basically consolidating. I'll talk about that in a bit, and also gold price. Is this sort of showing signs of a bit of fatigue in the run higher in gold? Maybe. So a bit of a turnaround in sentiment that we've got today, and it'd be interesting to see if this is also in front of the Janet Yellen congressional testimony today. Now, markets have obviously had a massive dump since the Fed hiked interest rates in December, and certainly this is the first time that Congress has had a chance to quiz Janet Yellen over why the Fed chose to hike rates and the outlook going forward. The market will be looking for signs of any sort of dovish shift. Maybe, the dot plots on the Fed suggested back in December 4 rate hikes this year. I think that it's highly unlikely that we're going to see that. Well, certainly that's what the market is pricing in. I mean, the market is struggling to price in 1 at the moment, let alone 4. So the market will certainly be looking out for dovish hints from Yellen today, and that could be supportive for markets. So that's at 3 o'clock this afternoon. So that is the big driver for today. Other than that, we do have the industrial production for the UK. That's at 9:30. That's expected to come in again at 1.0% for the year-on-year data. So basically, pretty much in line with how it's been last month. We've also got the weekly oil stocks. Now, this is the EIA report, which is expected to show 3.7 million barrels of oil build on the crude, but also the sort of derivatives as well. That'll be interesting. That is expected to show 1 million build. So if that is down at 1 million, that has been really high recently, and that certainly isn't supportive of the oil price. That is certainly the couple of spikes that we saw a few weeks ago, which drove a significant selling pressure through the oil price. It'll be interesting to see if that starts to sort of fall away or even go negative. So that could provide some support for oil. But the main focus is certainly on Yellen today. Now, the chart of the day I've got is the dollar CAD, actually, the dollar loonie, and again, this is interesting because we've seen this breakdown of the uptrend as this correction on the dollar has continued. This is sort of dollar correction driving this move. But we've also seen not a huge reaction negatively to the big selling pressure that we saw through oil yesterday. So it would suggest that the weaker dollar is still the driving force through this chart. Lower highs, lower lows in this correction, and it looks like it's coming back towards. I've got this blue line in here, this big uptrend, this big blue uptrend here, and that uptrend dates back to May 2015, so about 9 months, 8-9 months or so, and that comes back in at 35.50 area. So there is sort of room still for this further decline. Now we've got the RSI, which is falling away. Now the stochastics had picked up, now falling away to just beginning to roll over slightly today, as the market has just turned a bit lower. Now, as I wrote my morning report, it was sort of not a million miles away from the high of the day, and the stochastics were actually sort of looking fairly reasonable. But if the market closes lower today, that could sort of see the stochastics starting to roll over. Again, that would be sort of more consistent with a bit of a correction. Now, we've got the intraday hourly chart, which is in a bit of a consolidation mode. We saw yesterday's low of 37.85, sort of about 190 ticks actually, up to 39.75 area. So about two sort of 190 or so ticks of consolidation around these sort of flat moving averages actually. And it'll be interesting to see how this goes, because we've had a bear divergence on the stochastics RSI and MACD on the hourly chart, with that high there, higher high but lower high in the RSI, MACD and stochastics. So that would suggest a loss of momentum in this little near-term rally, and again it would be sort of consistent with the trend that we've seen in recent times, where these little sort of bounces get sold into. Little technical rallies get sold into. We've seen that technical rally coming from that low there at 36.35. It just looks like it's rolling over again. So if we see a move back below yesterday's low, 37.85, that could certainly continue that sort of move, that trend back towards the uptrend, this sort of corrective move within the big uptrend. And it looks to be as though that's what's happening. And with that in mind, I wish you good luck in your trading today on the dollar loonie, and I'll speak to you later, I think.